Hey traders! In this video, I'm going to share a scalping strategy that doesn't require any indicators on Tradingview. It's been both back-tested and forward-tested, delivering over 70% accuracy. Make sure to watch until the end to grasp the entire concept. Let's start with the strategy. So first of all, you have to mark out your Asian session range. So you go to Indicators tab and type in FXN Asian Session Range. You will see the indicator by Rob Minty. Now open it up and you will see the Asian range, the London range and the New York range. And we're going to be using the 5-minute time frame. After the Asian session, we have to look for a market structure shift. Now it could be any market structure shift. Now over here. You can see I have annotated here. The Asian session ends here and then we have this low and price breaks this low, giving us a market structure shift. Now this is what I call SMC trap or ICT trap, whatever you want to call it. Now a lot of SMC traders or ICT traders would try to go short from this area, from this auto block. The strategy here is that you will not be entering here, but you will be waiting for price to sweep the high once again. So instead of taking your entry, you're looking for another sweep. So price goes up, right? With high volume. Alright, I'll get into that later in the video. But you want to see price take out this high and then you are looking for a formation of inverse fair value gap. Alright, now what is inverse value gap? It is a fair value gap to the left side. So over here, look at the old fair value gap, right? The most recent inverse free value gap which could be formed here. Now all you're looking for is to price to close back below the inverse fair value gap and you're looking to take your entry from the retest of that inverse fair value gap and you're going for 1-to-1 rest reward. Since this is a scalping strategy and has a high win rate, we'll be going with 1-to-1 ratio. What I have tested it and that's why I'm suggesting you stick to 1-to-1 ratio. It also works better with 1-to-2, but don't go any higher because it will not work for you. There was an auto block and normal ICT trader or SMC trader would try to short from here if price goes into this order block and drops down to some degree. So it's going to be like that. Then that setup becomes invalid. I want to see price shoot through the order block. Usually do not want to see any sort of a reaction from the order block or a fair value gap that was formed. And I'm looking for the very recent inverse fair value gap. Once it's from, I'm looking for a reclaim of that inverse fair value gap and I'm simply just going short here. So after Asian session ends, you look for a market structure shift and then you're looking for a sweep of the last low before market structure shift. So this is the low price sweeps that we wait for an inverse fair value gap formation and we simply go along on the retest and go for 1-to-1. Now there are 3 ways to anchor from this inverse fair value gap. A risky approach is when the inverse fair value gap is formed and you're waiting for price to close below the inverse fair value gap, right? Instead of waiting for price to close below the inverse fair value gap, you can simply set a sell stop order here and as soon as price breaks out of this inverse fair value gap you will be triggered in. Now this is risky because price can stop you out and you have to put your stop above the high. The other way is to wait for a candle closure below the inverted fair value gap and you anchor when the candle closes. Now this will get you in the trade early. It has pros and cons. Each of the 3 methods have pros and cons, so if you're looking to enter directly with sell stop order, there's a chance that you might get stopped out, but you will get the entry and you will not miss the entry. Alright, now for the candle closure, you will get the entry early as well, but your risk to reward. Your stop loss is going to be big and the retest method is you are simply waiting for price to come back and retest the inverse fair value gap. Now con of this method is you're going to miss out on a lot of trades but you will get a better risk to reward. So choose your style. I personally recommend the close below and retest. Once the price comes and retest this I will take my entry, or if the candle closed just slightly below the inverse I can directly enter off that candle. So I hope by now the strategy is clear. We're simply looking for a market structure shift after Asian session, and then we're looking for a sweep of the last high or low that was formed before market structure shift. And then we're simply looking for a formation of inverse fair value gap, the very recent inverse fair gap, and we're looking to take our entry from that level. Let me give you guys some examples and then I will end the video. Here is example number 1, and I'm using the indicator. I'm looking at your GBP USD on the 5-minute time frame, and it works on 5-minute time frame, and I've tested this on your Euro USD and GBP USD. I'm not sure about any other pure asset, so you can just go ahead and test them if you want to and see where things go. So over here what you can see is this is where the Asian session ends. And right here we have our first market structure shift. Now we have the SMC trap. Right here we have the order block, SMC auto block or ICT auto block, whatever you want to call it. Now notice what happens after market structure shift. A lot of people would be going along here, but price came down and swept the low. Now if I zoom in, you can see that we formed the inverse fair value gap here. So this inverse fair value gap is where we should put our focus on. Now we waiting for price to close above it. So technically you could have gone long here, or you could have set a buy limit order. You would have taken your entry on the retest. So this would have been your entry. Your stop would go right below this low and you would go for 1-2-1 risk reward. Very simple. We're just scalping. We're out of the markets and the win rate is above 70%. You'll be able to pass your challenges, you'll be able to do anything. This requires no daily bias, guys. Now here is example number 2 on the same day, guys. Look at this, we have a market structure shift, right? So a lot of SMC or ICT traders would try to go long from this area. This is actually a liquidity level. Price comes down and sweeps this low. You can see that right here. It's used to, instead of like going up from here, and notice one thing. Price came into this order block, but we didn't see any reaction. Price just rushed through this order block. This is what I want to see. I don't want to see price come into this order block right and then push and then come down to some degree. It can just consolidate a little bit. But if it goes a certain degree right, and it's best to avoid it. Now over here you can see we swept this low and we formed another inverse fair value gap here. So price closed above it. You could have entered here, you could have set a buy stop order, or you could have set a limit order on the retest, and you can see price came back into this level and we had a beautiful push to the upside. Now you can go 1-2 risk reward with this as well, but if you have a personal risk management strategy, you can use it with this. But test it first. Let me give you guys one more example over here. You can see the Asian session. What do we have here? We have a market structure shift. Now this is the order block, right? So we want to use the 50% for reference. If we see a reaction on the 50% of this order block, then the setup might become invalid. But you can see prices rushed through this level and it swept the liquidity here. Now once the liquidity was swept, we are looking for a formation of the inverse fair value gap. So we had this inverse fair value gap here, but price failed to initially close above it. But then we went down further and we created another inverse fair value gap, which is right here as you can see. So price goes up. Now you could have set a buy stop order here, you could have gotten triggered here, or you could have set a high buy limit order and you got to put your stop right below this low, and you could have gone for 1-to-1 risk reward. You are in and out of the market. You're just scalping the market. So really quickly, and you're just getting out and going on with your day. And that's a wrap for this video. Don't forget to subscribe, like, and share. See you in the next one.